So the S&P 500 sold off pretty aggressively last week, and I wanted to take this time now with so many people worried about a potential top in the market and a multi-month long correction, or what a lot of people are saying, potential recession. I felt that it was a good time to take a very strong top-down look at the S&P 500. What we're going to be doing is looking first at a monthly time frame, which is one of the strongest time frames we have. And I want to go over why I am still bullish and why I think that we are going to continue to remain in a bull market for now, and exactly what has to happen in order for me to change my tone. Now, the first thing that we're going to look at, as we said, is the monthly chart. Now, I have deployed a very simple trading bot based off of the monthly chart for the S&P 500 and back-tested strategy. You're going to see here that over the past 32 years, if we were to just enter when the monthly BX trender on the S&P 500 turns green and exit when it turns red, we would have a performance of 870% with about 59% win rate. But most importantly, we would have a risk versus reward ratio of 6-1. This means that our average win is 6 times what our average loss is. And you guys will see here, this is very simply the entry and exit criteria. And if we actually look at what this really looks like on the chart, you're going to see that in most cases, it's either a very simple rejection that happens, or in most cases, when we are right, price will break out for multiple months. Normally about 10 months is how long the rally will last. Now, I understand what a lot of you might think is that, yes, but in those cases, you can see the market is not as, quote, overextended as it is right now. Well, you would be mistaken, because every single time that we were pushing up in most of these cases, we were trading at all-time highs. For instance, if we go back and look at 2018, 2017, 2020, we were pushing in all-time highs. And in 2020 specifically, I'm sure that 3-4 months after COVID, very little of us would have expected the market to just continue to rally when it was trading at all-time highs, pushing up another 37%. And then again, after that 2022 bear market, which you could see this would have gotten us out of that, we had once again another 34% rally. So this is the very first thing that I look for, is to get an understanding of what is the macro time frame telling me. Is the BX trender on the monthly time frame showing buying pressure, or is it selling pressure? And right now, it's showing buying pressure. Now, the second thing that I look for is going to be the weekly time frame, and I want to see as well what is the BX trender doing. And you'll notice here on the weekly time frame that the BX trender is actually red, which is not ideal. In a perfect world, we would want the weekly to be lining up with the monthly, much like what we saw back here in June, July, August, and September. A big weekly BX trender increase and a big monthly BX trender increase. If I actually put a multi-time frame analysis on the screen here, you'll see at the bottom that the monthly was green and also the weekly was green at the same exact time. When we're getting all of this at the same time, that is a very strong indication of a breakout. If you want to get access to all of the indicators that we use in these videos, as well as learn how to implement them within the strategy, go ahead and check out the link to our trading library down below. You'll get access to the BX trender, the Smart Money Mastery and Smart Money Zones, and the volume profile. Each course shows you how to actually set up the indicators, the proprietary settings. Over 20,000 students have implemented this into their trading system and are seeing consistent profits, from as low as $10,000 all the way up to over $3 million. The link will be in the description. And so while we still are showing a macro time frame breakout, I'm not going to lie, the weekly BX trender being red is not ideal, but still, because the monthly is strong, that is more important. Now, there is something else here if we are being objective, and that's a divergence between price action and the weekly BX trender. You can see that the weekly BX trender is actually making lower highs each and every single time that price breaks out. That is not a good sign. While price is making higher highs. This is called a divergence, and it is normally the sign of a potential top. Now, once again, we have one major piece of bullish information being the monthly BX trender, one piece of bearish information being the weekly BX trender. Now, I want you to understand that back here during this breakout, through all of 2023, we're going to have a monthly BX trender at the bottom of your screen. through this entire breakout, we had divergences and back and forth movement on the BX trender as well. For instance, every time that we made a higher high here on the BX trender and price action on the weekly was making higher highs, we had the same exact thing that's happening now. But because the broader market, the monthly BX trender was green, it's showing a massive breakout, which means that this, while it's not ideal, does not necessarily mean that the market is going to crater. Now, the last thing that we're going to look for is going down to the daily time frame. And you can see that the weekly BX trender, as we stated, was red. But if we move to the daily and we turn on the fair value basis or we turn on the market bias, you are going to notice that the overall structure and trend on the short-term daily time frame has not broken one time since that low in April. This is very important because even though I'm going to put a weekly BX trender again at the bottom of your screen, even though buying pressure back here on April 7th, 8th, 9th, 10th was red, the day that Trump was tweeting and it looked like things were going to escalate with China and the market pulled back significantly. Even though the weekly BX trender was red, structure and trend on the daily time frame never broke. And that's why if you go back and watch the videos that we did back then, I was not bearish. I did not think that the market was hitting a top. I said, as long as we're still holding this level, we should continue to remain bullish. And once again, I said the same exact thing Friday of last week as price was pulling back into this daily market bias / fair value bias. Price was hopefully going to bounce between 660 to 665, and that's exactly what happened. So as of right now, I am still bullish on this market. What will change or what will have to happen in order for me to change is this daily bias to break. If this daily bias breaks, if $660 breaks and price begins to close under $655 or $658, that is a really bad sign. Because if we start to sweep really under 650 would be like worst case scenario. But if that actually happens, then we have a very good chance that price will come back to test the weekly fair value basis or market bias, which would be another 6 to maybe even 10% sell off, which would test the previous highs from February of 2025 or February of this year. So I am still bullish. I still think the market is going to continue to rally. I still think we are in bull mode. I still think that there's a really good chance for an end of year rally and a Christmas rally. But if that daily trend breaks, then I do think we'll have a 5 to 8% correction. And at the end of the day, that's really not the end of the world when you think about it, right? I know that for a lot of people, they do not want to deal with losses and they do not want to deal with drawdowns. And I understand that. But at the end of the day, it's just a part of doing business. There's no way that you can get around it. I mean, if we look at any type of winning strategy, let's just even go back to that BX bot once again. You would have performed very well, but even with this strategy, you'd have a drawdown of 21%. If we look at even something like NVIDIA, where in the past 26 years, you would have made a 38,000% return, look at your max drawdown, 49%. That means that even with making a 38,000% return compounded, you still at one point would have lost half of your money in the short term. And so this is what really separates those who want to do this professionally versus those who are just here to try to make a quick buck. If you're afraid of this, if you don't want to trade because you're afraid of losing money, you're afraid of having a drawdown, you're never going to be successful because it's simply a part of the game and there is no way around it. Now, I'm not saying it doesn't suck. Of course it sucks. But at the end of the day, it's simply a part of doing business. I hope this helped and let's have a great week.